Well, as we go deeper into 2026, investors are keeping a close eye on inflation, interest rates. We're expecting the numbers for December in Nigeria and ongoing FX reform. Today, we'll explore the country's investment climate from promising sectors like banking, agriculture, tech, and energy to the risk that could shape markets at this point. Joining me for this conversation, Mr. Ike Chioke is a Group Managing Director, AfriInvest, West Africa. Join me right here in the studio. It's great to have you, sir.
Thank you.
Last time I saw you was in 2025.
Well, that was a few days ago.
Not too far away.
Last year now.
Yeah.
Okay.
Even though it was a new year. Happy New Year.
Happy New Year to you.
And yeah, it was fantastic. For the equities market.
It was brilliant.
At this point, everybody made money. Maybe not.
50+% up for the entire market. We're over 100 trillion naira for the first time. So many companies did sort of north of 50%, 75%, 80%. A few I know did 300%.
I even saw a 1,000.
Yeah, it's been spectacular for the market.
Right.
And it's really a sort of positive news because we've been echoing that the market is back and it's different from how it used to be because there's more transparency, there's more systems that ensure efficiency. But now people can see for themselves that the reality is in, yes. Right,
and this coming from a 2025 where we had stable FX market.
Correct.
Inflation declining about 14 percent, and now we're in 2026, and it seems that energy is still flowing into the equities market. We're still seeing big gains. We had a Santa rally. We're still seeing gains even now.
Okay.
So it seems this continues.
Well,
or maybe not.
I think, well, you have to contextualize it from the point of view of the overall economy itself. We saw growth at 3.9% GDP growth last year. We are projecting AfriInvest Research 4.3% this year. That is on the back of what we see as sort of constructive, positive momentum. The central bank has done a great job instead of stabilizing the FX environment. External reserves now $45.6 billion. The sort of spread between the parallel market and the official market is less than 1% because of this EFM system, electronic foreign exchange matching system, that allows buyers and sellers to see themselves. It's much more efficient, and there's no way opportunity for speculators. So that's helpful. Although MPR is still high, it's come down to 27%. We think the environment is ripe for further rate cuts. We've seen a more dovish stance from other central banks, and we hope Nigeria would toe that line and perhaps bring rates down another 200-300 basis points.
Even though President Trump is not happy with Powell, the Fed chair.
Let's put Trump aside. We'll talk about Trump in terms of the risk factors.
Right.
From an interest rate environment, we can see rates are easing. And we think that sort of 16 or sort of 19 to 22% yield environment you saw last year will come to all under 20%, so perhaps something like 16 to 19% this year. So that's all positive. So if the CBN were to sort of lower rates, that will also be signaling for the banks to reduce the cost of borrowing, allowing in manufacturers and businesses to borrow more efficiently, create more jobs, expand their business. So that augurs well. Ultimately, it flows back to greater earnings in the market, lower PE multiples, better price, better value for investors. So this is all very positive.
Yeah. It's a very rosy picture.
The indices are there.
Right.
But obviously,
the risks are there.
Yes, because when you look at it sort of from a 35,000 feet level, it all looks positive. You need to come closer and then begin to see which ones are really the right places to be and what are the potential risks that investors might face.
Right. So, looking at what's playing out so far, geopolitics again is shaping global economies at this point. We're seeing gold, the safe havens, hitting new highs at this point. Do you get nervous, at this point when you see, what's playing out with the safe haven market and geopolitics with Iran, Venezuela, and the U.S.? You get nervous.
Very concerned. Because of the issues around geopolitics, and I think Nigeria just needs to be much more vigilant, particularly from a diplomatic point of view. First, to make sure that our views are communicated to the big countries, America, the European bloc, China, Russia, but also to make sure to avoid us becoming a potential scapegoat. Because when elephants are fighting, you can just get trampled, and they call it collateral damage. And so some of these tariff issues, you remember how, Trump putting up tariffs here and there, left, right, and center, suddenly you find yourself cut out of a nice window where you could export to the US market. But geopolitics is a real big issue for us. And of course, this year is a pre-election year, so that's also another big issue, because with all the electioneering going on, governance suffers. And the time to decision making, which in Nigeria is very slow normally, becomes abandoned. So good things that could have made the economy tick along, move faster, could suffer because of politics. And then insecurity is definitely there, and it continues to wane strong. You talk about gold prices hitting new highs, but gold is coming from Zamfara, and that creates more insecurity for us there because of all the banditry going on. If they feel they can sell more ounces of gold at much higher prices, it could increase banditry. But even the fact that Trump decided to help us fight insecurity is also a problem, because if you kind of paint the picture as a genocidal war, fighting for Christians, it could then create an unintended consequence of people coming here to make Nigeria a theater of war because they want to fight America. And so some of these things we need to be extremely cautious, and that's why I think on a diplomatic level, Nigeria needs to be much more vigilant and make sure the right people are talking to all those people.
It's quite interesting, seeing some, other African countries actually profiting, from, these all-time highs, when it comes to some of the metals. We've seen that with copper, to some African countries, making a good buck.
Well, it's good. Yeah, if you're a resource-rich country, this is perhaps your time.
Right.
Because
but it's funny how we're still concentrating on oil.
Yes, that's always been the problem. And I think that even if I were to look at Nigeria from a quality of earnings and sustainability point of view, even Nollywood and the music industry and our film industry can actually earn much more than oil on a sustainable basis that creates employment. But it's just that we're not paying enough attention. Of course, we are seeing and noticing some of the big names that are making a lot of money and some of the big producers that are also making money, but we could actually create a real machine around that. Tourism is one area that we totally neglect. I was just with some gentleman from Egypt, and he's just telling me the sort of investments Egypt has done in the tourism industry. We are nowhere close. Then, technology. With all the youth we have in the country, the ability to do outsource employment where we have our youth here working for overseas companies, huge opportunity. But we need to build infrastructure. We need to bring fiber optic. We need to bring down, make sure the quality of education is higher, improve our healthcare, because all those impact the quality of human capital we have to deliver. So we're delivering quality, and we can get more meaningful employment at a high premium. But alas, oil is the easiest one,
right? Because
oil allows some people to, do other things,
All right, let's go back to following the money right there in the market. Definitely, I guess there's still a lot of optimism, for the local boss, in 2026. But what trading trends did you see, like, interesting trading trends? I know most people now, we see them on the apps.
Yes.
They're trading Nigerian stocks.
No, that's true. I mean, AfroInvest has one of the best apps in the market, AfroInvestor, for trading. But better yet, we've launched the Plutus Neo, which is our investment and savings app. What we're doing with Plutus Neo is to make it a platform that aggregates both our securities trading, our asset management, our investment research. Because AfroInvest has always been a research-driven firm, making sure that anything we put out there is supported by fundamental research. And so we believe that the best way to go is to have a platform through which our customers can see everything in a single interface which is what Plutus Neo is about. So today, with this app, Plutus Neo by AfriInvest, you can actually go in and click to trade Nigerian stocks, and that will take you to our AfriInvestor. You can click to trade US stocks. It will take you to another window, which is driven by Drive Wealth, our partner in America. You can trade all the US stocks. You can put your money there and forget it. You think it's like a current account. It's actually an asset management account, and it pays you double digits in terms of savings. It's like your current account paying you double digits. Now you can lock it for a period of time, and it'll give you a better return. We're now working towards introducing a partnership with a banking app to allow you to make payments and also lending, and that is soon to come. But Plutus Neo is a new kid on the block. It used to be called Optimus by AfriInvest, but we renamed it because we are positioning it for greatness.
Right. So,
greater things.
Do you think, you know, we didn't have trading apps, you know, before now? A couple of years ago, you still needed a stockbroker, you know, calls and all of that, transferring money, you know, to help you buy a stock.
Yeah.
And now we have T+2
settlement.
So, is this attracting more youths?
It's actually attracting
to the
much
market.
better. Absolutely. From our side, we've seen our customer base kind of just jump incrementally. Once upon a time, when we used to have our customers call us to execute their trades, we're dealing with, you know, less than 20,000 customers on average every week. Today, we are trying to manage over 200,000 customers trading online, and that is growing. We're onboarding about 5,000 to 10,000 customers a week because of people seeing the opportunity of online trading. Remember, the issues that Nigeria suffered back in the time when the market collapsed were things like transparency. I bought some shares. I need to see instantly that it's settled in my account. Things like access to market. The market has gone up. I want to sell, and there's no restriction. In those days, they tell you, oh, we need to dematerialize this or that. No, it's all digital. It's all connected to your app, which is connected to both the NGX and connected to the CSCS system. And as soon as you execute an order T+2, you're done. And it sells the shares and settles the cash in your system, and you can see it. Immediately, you can decide what you want to do. You can buy more, or you can transfer back to your account and spend it.
Because, you know,
so that transparency is very helpful. When you go on
social media, you see some of these gains, you know, flying around. You know, companies are gaining, you know, 1,300%, 400%, 500%. You know, some people will see that and say, you know what, I'm going in there. But going into that app without understanding, you know, how these markets really work. What's your advice to that kind of person now? You download the app, oh, fine, I want to start trading. I just start trading blindly. I'm just buying anything.
Well, go for the apps with the houses you know that you can trust, particularly those who have the research to support you. So you can click on the stock and see the price history. You can do, for example, on AfriInvestor, which is our own app, you can see 1 month performance, 3 months, 6 months, 1 year, you know. But there are some fundamental things that we also offer, and that is coming through our research department called AfriInvest Consulting, where you kind of see the basics of how you understand the market. It's not just simply price, because you could see a stock at 10 naira and I see one at 20 naira, and I decide to buy more of 20, and you're thinking, but the 10 naira is cheaper. No. The basic fundamental way to look at it is price to earnings. So if my 20 naira stock, you know, has 10 naira earnings, you know, so the price divided by 10 is 2. So the P multiple is 2. But your 10 naira stock might have only 1 naira earnings. So the price to earnings multiple is 10. So that means it's going to take you 10 years. If it's 1 naira is getting per share, it's going to take you 10 years to get back that 10 naira you paid for, because it's giving you only 1 naira every year. Remember, mine is 20 naira with an earnings of 10. It's going to take me 2 years to get my money back. See, so it's the same logic you would apply in trading. You know, as an SME, buying and selling, you know, milk or Bonvita, that you also apply in the markets. You need to understand the fundamentals. And through AfriInvest, you can get access to that rich depository of information about the markets, PE multiples, price to book value multiples. Now, when you've conquered that, then we then come and talk about technical issues. Like, yes, the shares are the P's are low, but there is market demand. Simply, if people are buying one item more than the other, the price of that item is going to go up, right or wrong, you see?
Right.
So technical issues can also affect the actual price of that stock. So, and similarly, other macro issues, we talked about the economy, we talked about the risks in Nigeria economy. If the issues around Nigeria economy starts to look negative, then even the whole stock exchange will kind of cool off a little bit.
Right. So I guess as an investor, it's not just getting on the app and buying anything you see. There's so much that goes into investing. Thank you so much for helping us break this down. I've been talking to Mr. Ike Chioke, he's the Group Managing Director, AfriInvest West Africa. Thank you so much. Ladi. We'll see if we have another stellar year.
I'm looking forward to it. I think that the outlook is constructively positive. Given the election issues and given the geopolitical tension, we still are positive about the market. Our outlook is on a base case scenario for the market to do a 40% appreciation this year. That means taking us 140 trillion naira market size.
Incredible.
Yeah.
Fantastic.
If it's an upside case, you could be looking at up to 80% or even doubling to 200 trillion. So let's keep our fingers crossed.
Thank you so much.
It's a pleasure.
Thank you, sir. All right, we'll take a break now. When we come back, we get a sense of what's playing out in the cinema market. That's in a moment. Just stay with us.